Good morning from the Chicago Board of Trade building here in Chicago, downtown Chicago. It is Thursday, the 31st of March, 2022. Thanks for joining me on episode number 2203. A quick mic check, please, first and foremost. Hopefully, I'm not blowing up your headset or speakers. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So popping right into our pre-market summary sheet this morning, a quick reminder that it is the last day of Q1 2022, last day of Q1 and the month today. So be careful into the close today. The closing trade is likely to be somewhat volatile, I would guess, given how the Q1 has progressed with the big sell-off in January and through February with the Ukraine-Russia crisis and this very strong run-up over the last 3 weeks. So there's likely to be some window dressing and some movement into the close of the day. Be careful. The other thing is we're coming into a market that is basically lackadaisical. It is just sitting sideways, except for crude, crude has seen initiative selling from the point of control of $108 into and down into about $102. It's currently trading 102.31. Crude oil has traded a range of 107.80 down to 116. It is down 5.1% or $5.53. Big, strong, violent moves in a major product, a fundamental product that is physically deliverable. It is just, it's very interesting. But you're looking across, you see that there's not much movement here. There's nothing going on. The Nasdaq's up 25 basis points. The DAX is up 14 basis points. There was a slew of numbers out of Europe. Retail sales out of Germany. Great Britain had GDP growth Q-on-Q final, year-on-year final. Slightly better than expected. Inflation rate year-on-year prelim for March for France came in 4.5, forecast 4, consensus 4.3, so higher inflation than expected. The unemployment rate in Germany came in at 5% in line. Unemployment change, negative 18,000 versus negative 20,000. And the unemployment rate out of the Eurozone came in at 6.8 versus 6.7 expected, so slightly worse. Personal spending came in light at 0.2% versus 0.5. It's too soon to read into that and see if it's demand destruction or what due to higher prices. This is for February. Also for February, personal income came in at 0.5 in line, and then we got the PCE price index at 0.6 versus 0.8 expected. And then on the year-on-year for February came in at 6.4 versus 6.5. Initial claims came in slightly worse at 202,000 versus 195. That's a lot to cover. And then we have Feds Williams. Currently, we have Chicago PMI, which is listed at 945. But as always, I want to remind you, this is a private number. It's a subscriber number, and it goes to members at about 942. And we're likely to see a move into 942. So if you just initiated a trade short term and it's coming into 940, it's best to cover if you don't have some distance. This evening, we have Japan's Tenkan Large Manufacturers Index and China's Kaikshin Manufacturing PMI for March. The China number, the Kaikshin number, is very, very important. So that's what's on deck. Looking at the S&P, the status of the S&P, we have another balanced profile inside of yesterday's range, inside of the prior session's range. I guess the sessions are the days where we open in we come in and find a very wide out of range overnight session are behind us now. The inventory 62% short, not really long, not really significant. We did continue to push higher, which I talked about in the Convergent Trading chat room yesterday. We pushed back to yesterday's open at 46.14 with a high at 46.14 and a quarter right here. The point of control of 4,600. So I'm expecting this level this morning. Again, I'm expecting this level this morning to be the over underline, and that's what I sent out to Convergent members on our stock zones, that the stock zone levels, that the 46.02 is likely to be the over underline today, with 45.56 being the magnet. We'll go over that in a minute. And then the range is right in line with the most expected range in the last 252 days of 23.75 points. So, given all of that, what is this telling you? You already know the answer. The volume is light, 135,000. Remember, coming in, we've had 300,000, 350, 450, 600,000. We've dropped down into 235, 190, 156, and now 135,000 contracts traded by the time the Trader Bite starts, which is at 9 a.m. every day. We are in range on a balanced profile. This is another one of those days where you want to sit and wait, or if you have setups, then you would want to tighten things up, tighten up your stop, tighten up your targets, as it's likely to be choppy. Okay. A quick review of yesterday. Yesterday, the primary expectation is a push higher into 46.21. 46.21, this is the stock zone here. And then the expectation is we were likely to drop into 4,600 relatively quickly. 4,600 was the magnet yesterday, with the over underline at 45.77. The target, and I'm sorry, this looks like a boob. I'll add another ring to it. Well, embarrassing picture there. But this was meant to be the target yesterday. This was the target for scenario 1 at 45.77. 45.77. We were looking for approximately 45 points or so of range. And so let's compare that to, this is kind of an accountability portion. The reason I do this part is just for accountability, because anybody can get up here and just draw lines on a chart and make up a story, right? Hindsight's 2020, but that's not what we're doing with the Trader Bite. We're looking forward, and in doing so, we want to make sure that we are learning from the prior sessions. So we had an open that was an open auction in range. We were opening in the upper distribution. And yesterday, if you recall, I showed two distributions with 46, 11, or 12 in between them. We had an open auction in range and relatively choppy, and then we pushed to where? We pushed to 22.50. If you recall, the number I was looking for to the top side is 21, and then all downwards from there. I was looking for to rotate down, get down into the 45.77. That's where that funky looking target was, and it ended up pushing at the low yesterday was 45.74.75. So this is on point again, just like the day before. Nice little setup here into the close. Nice long setup against the 81. The 81, by the way, yesterday, if you have software that can replay, 81 presented a very clean example of how order flow against a predetermined level can get you in a trade with very tight risks. So the trade yesterday, the setup yesterday, if you were in the Conversion Trading Head Trader channel, was 81.50, 81.50, looking for 90, and then targeting 99. And so we ended up getting the 90 here. I forget what it was, actually. Let me scroll back. So I said at 250, 258, 81.50, long setup for scalp, looking for another stab at 86. 86 taken, 61, 91, looking for 91 next, and then targeting 99, and it ended up pushing, coming up just short of 99 at 98.5 yesterday on the close. Really a really decent order flow based trade with higher lows and a strong battle. You could see the volume that went off at the 81.75. Pretty decent setup there. So if you're looking for, if you can replay yesterday, I would strongly recommend you replay that closing trade and look at how the sellers kept trying to push and the buyers were just absorbing. It took a bit, and then as soon as the sellers relieved, you had that strong push up initially, which squeezed all the weak shorts looking for lower lows, and that's a typical scalp trade right there. What have we done since? We're still at 136,000 contracts so far. Pretty poor volume. We have basically a profile that is balanced. We have the point of control at 4,675. Yesterday's point of control is at 4,604, so the point of control is in line. So here's something you want to notice. Excuse me. You want to notice that there was a point of control here from 2 days ago. That point of control was right here yesterday, and we're opening with a point of control that's slightly higher, and this is a market that is making a rounded top, and that's why I switched the magnet to from where we are now to below. So I swapped, basically I moved the over-under line from 45.77 to the current point of control, because that's likely to be the over-under, and then the magnet becomes the next key high volume area at 45.56 below. Why? Because we put in a high, we put in a lower high, we breached the low yesterday, so we've ended the one-time framing up, and I'm expecting this thing to roll over. And it's really important to remember that tomorrow is non-farm payrolls. So we may have the fuel tomorrow, although ADP came out pretty good yesterday. We may have the incentive to liquidate some of these strong longs. If I showed you a bigger picture, let's take a look here. You'll see that there's a void in here. So let's move this forward. Let's just look at what has happened since the last low. Okay, so I'm pushing this profile forward to the last low, and I'm going to zoom in. Okay, so we have in this entire range, this entire rally, the action between 2 days ago, which put in this high point of control, and yesterday, which are overlapping days. These are two overlapping days. We have a micro composite now because of the two overlapping days. We're starting to look at what's going on. These two overlapping days managed to move the point of control to the high, and we are battling underneath it. We're at 45.93. This is a significant shift in value and the perception of value here. And so what that does is it creates an environment where this whole range is likely to be tested. So from 45.39 all the way up to what was defended yesterday in that 45.80 area, we have this low volume node notch out. And so if we start to move back through the 81 today, it's likely to fill the gap, and it's very likely to precipitously move, that's a big word, to move into the point of control here. And if it does not bounce off the point of control, then it's likely to engage into that 45.39 area, and then beyond there 45.20 right down here. So that's the bottom of this next. So think of it like a ball that's falling down a hill. It's got enough speed. There's plenty of size there. It's got enough speed. In fact, if I draw it on here, if I let go of the ball at the highest point here, it's likely to run through, and it's likely to very easily run through here and then slow down in this area at 45.39. And if it doesn't confront, and then at that point, I expect it to modulate and sit right over this composite point of control at 45, or this high volume node at 45.60. Okay, so I expect we've gone to the other side. We've cleared the top of the hill. We are likely to fall through, consolidate here at the 45.60, but most likely run to the 45.39. And if we confront support at 45.39, it is likely to start to fill in this area with volume and repair some of this profile. If not, then it's likely to get above this other side of the hill and drop right into that 45.14.15 area. So I am slightly bearish. I believe that we are putting in a topping formation. What cancels that is if we take out the 46.22. The 46.22, yesterday's high, will cancel the one-time framing. But today I'm expecting a lower high, lower low. Okay? Going into the end of the month, going into non-farm payrolls. Let's take a look at what was expected for today. And by the way, congratulations to Captain Kevo, Charlie, and Rambo 007. Those of you who attended yesterday's show with the Futures Radio show, the Edge Clear giveaway of 3 Bose headsets were won by these 3 gentlemen here, once they fulfill the requirements, the rules, the items will be sent to you as soon as possible. Let's take a look at what's expected for today here. All right. If you didn't watch the show, it is packed with information. The whole point of it's really important for this series I'm doing with Anthony Crudele to make sure traders get a lot of what they need in order to trade sustainably and professionally. I'm looking for a response back into 4,600. I'm looking for a fight at 4,600 right here. This brings us back to the full session VWAP and mid at 46.02 and 46.0250. So this is the 02 here. If I see that it's not able to get back there early this morning, I want to get short and hold strong. I'm expecting the overnight stat to be taken out at 90, and I'm expecting us to run into 81 from yesterday. 81, a lot traded there. 81, battle the 81, and then break through, and then I expect us to make a run for the 60 before it consolidates into the end of the session and fall into the singles that we left behind from a couple days ago at 46. This is scenario 1. It is a bearish scenario. It is a strong bearish scenario. There was a lot of buying coming into this rally, and I'm expecting that a lot of that will likely to be flushed. Open auction, test the 90.50, push below, consolidate, come back to the point of control. The over underline and the full session mid and VWAP consolidate here for a while, lots and lots of chop. And if it's not able to fall back through, below yesterday's the overnight low, or more specifically below this 97, 98 area, if it's not able to fall back through on the close, it is likely to make a run for that 22 high on scenario 2. 22 on scenario 2 at 822. So that's where we stand. Those are the two key scenarios. We're opening in range, in value, in balance against a lot of stuff. My skews to the short side, that's my plan for today. And the stock zones you see in front of you, the gray and colored bands, are my price map. That's what I'll do, where I'll do business. So if you want to meet me in the market with your trade, you'll meet me in these areas. Good luck.